This is Nightly Business Report with Tyler Matheson and Susie Gehring.
Bank on it. Better than forecast earnings out of Citigroup lift the financial sector and lead the Dow to a fresh intraday high. Do Citi's numbers set the tone for a big week ahead for banks?
Checking out how cyber criminals are lying in wait in your hotel, what business travelers and anyone else needs to know.
And bang for your buck, why more of your 401k dollars are actually working for you and not your plan. All that and more tonight on Nightly Business Report for Monday, July 14th.
Good evening, everyone. Corporate deal-making and Citigroup earnings lifted stocks on Wall Street today. The flurry of mergers boosted investor sentiment, and better-than-expected quarterly earnings from Citi raised hopes for more strong bank earnings this week. Here's a look at the closing numbers for the major averages. The Dow rose 111 points, closing back above the key 17,000 mark. The Nasdaq was up 26, and the S&P added 9 points. Details now on those better-than-forecast earnings from Citigroup and the massive settlement the bank reached with regulators over shoddy mortgage-backed securities it packaged and sold ahead of the financial crisis. With the bank putting those soured investments behind it, investors dove in on Citi, sending shares a full 3% higher today. Kayla Tausche has more on Citi's solid results, its settlement with the Justice Department, and what it means moving forward.
The bar for bank earnings may be low, but Citigroup easily cleared it in the second quarter with a handy profit beat and a rise in revenues, too. The reason? Trading activity that improved, albeit slightly, in June. Chief Financial Officer John Gersbach forecast a drop in revenues of 25%, so a drop of only 15%, as it happened, looked relatively better. Gersbach told investors that even with the drop, the bank can operate well.
I think we spend an awful lot of time focused on what's going on in markets. And so I think that there are some legitimate questions going forward as far as markets, but the rest of the business, I'd say we feel pretty good about the revenue prospects.
That's because loans and deposits grew and the bank released reserves previously stashed away for bad credit. But an otherwise rosy picture was clouded by a $7 billion settlement with the Justice Department, a $3.8 billion charge directly to Citi's bottom line, wiping away all but $181 million of the bank's profit. Brian Rogers, chairman of investing house T. Rowe Price, raised concerns about the cost of these settlements last week.
That's the shareholders' money. I think the good news is most of that is coming to an end. I feel as though the Citigroup situation might be one of the last, the B of A might be one of the last, and after that the banks can look forward and basically go about their business and not worry about further fines.
For Citigroup, it's a major legal milestone now behind it. Still, some investors like David Katz of Matrix Advisors say the bank trades cheaply but isn't a buy yet.
Citigroup's book value was actually down more than 50% over that time frame. So Citi seems to have its act together, but it's not as well run as some of these others.
Citi still has some unique issues to tackle: an ongoing investigation into fraud at one of its Latin American units, and a failing grade on the Fed's stress test, which CEO Mike Corbat says he's confident the bank can reverse.
We still are operating and feel strongly that this isn't an issue with our business model, our strategy, our levels of capital, or clearly our ability to generate. We feel very good about the communication with the Fed, but it's work in progress, and we've got more work to do between now and year end.
A long to-do list remaining despite an improving economy. For Nightly Business Report, I'm Kayla Tausche.
And here to talk more about Citi and the big week ahead for bank earnings is Fred Cannon. He's Director of Research and Chief Equity Strategist at Keefe, Bruyette & Woods. Fred, nice to have you with us. Let me just start by saying that it seems so strange that Citi can deliver good news for the banking sector on the same day that it settles a huge settlement with the Justice Department. Does Citi finally have its act together?
Well, good news is in a relative sense. Remember, a couple things that were mentioned. Number one is that the settlement had already been signaled. It came in line with that, but that $7 billion was much bigger than would have been expected just a month ago and wiped out this quarter's earnings. Secondly is the expectations for the quarter had been quite diminished going in, and they got over a low hurdle. That's a good thing. Citi still has a lot to prove, though, as was mentioned. The litigation issues aren't over. Yes, this is a big hurdle off the mortgage issues, but we have the FX issues, the LIBOR issues, and that issue that was mentioned in Mexico still in front of it. So this idea that somehow this settlement is finally getting litigation issues behind these big banks is probably a bit optimistic.
Fred, let's spin forward to a couple of the other banks later this week, J.P. Morgan, Goldman among them. It is tougher today, isn't it, or you tell me, for these big banks to make money. Their trading revenue is down, interest rates are lower, that provides a challenge. Investment banking revenue, despite all the mergers, isn't really blockbuster these days. What do you expect from those two?
Well, I think coming off of Citi, remember coming into the quarter again, expectations really came down hard. This year over year down 20 to 25% trading activity. Citi seemed to see things pick up in June. That can help them get over a hurdle. But what you said is very important. Making a good return on investment at these big companies is very difficult. You still have these litigation issues. We like to think of on Wall Street that they're one-offs, but at the end of the day, they do add up over time, and this trading activity is low. That said, these big banks are getting to be a position where they seem very cheap, and maybe we're getting to a trough earnings level for these guys.
You know, everybody's worried about higher interest rates, but the word on the street is that this is good for the banking sector. Are these buys? I know that you have for J.P. Morgan a buy on it, but is it time to pick up as many of these stocks as you can?
As you go into the back half of the year, I think you have to think the Fed is probably going to stick to their word. Who knows if they're going to really raise rates, but they're going to stick to their word that they're going to raise them in 2015. They're going to end the bond buying program. There's going to be a lot of people thinking about the Fed exit, and financials are a good place to be because it's the one area where higher interest rates, at least arguably, is a good thing. That's not a good thing for most of the other parts of the economy. So there is some good things there. That said, the truth is, as the Fed mentioned last week, we really don't have a good idea of what this Fed exit's going to look like in terms of bank earnings and bank balance sheets. It's a brave new world because of the $4.5 trillion bank balance sheet at the Fed.
I assume you heard Brian Rogers just a moment ago talk about how he thinks maybe this is getting the worst of the litigation risks behind Citi, though we did mention a couple of the other ones that are still there. In terms of all of the banks, where are we in that process? Are we in the 7th inning, the 8th inning, the 5th inning? Where?
It looks like on the mortgage issue, we're getting towards the 7th or 8th inning, I would say, and especially with Citi getting this big settlement behind them. I think if we can get these DOJ settlements behind it, much higher than expected, and the FHFA behind us, we have gotten over the mortgage issue. But the fact is that there's still a lot out there. FX is just being underscored here. What about these issues on fraud in Mexico, the whole asset management liability issues in the payment systems and the issues that have been raised? Remember this whole issue of BNP and these criminal charges in the U.S. Let's face it, the French and Germans are going to look pretty hard at the U.S. bank operations over there.
All right, Fred, thank you so much for coming on the program. It's always a pleasure to have you. Fred Cannon of KBW.
Thanks. Great to be on.
Well, in addition to Citi's news, some companies played Let's Make a Deal today, and that also lifted investors' moods and spirits. So far this year, mergers and acquisitions are running nearly 70% above a year ago, for a total of almost $2 trillion in deals so far. And today brought a few more. First up, the generic drug maker Mylan is buying the specialty and branded generics business outside the U.S. from the rival drug maker Abbott Labs. It's an all-stock deal valued at more than $5 billion. Mylan is expected to move to the Netherlands after the deal is finalized, a so-called corporate inversion aimed at lowering its tax rate. Shares of both companies finished higher. Also, Whiting Petroleum announced plans to buy Kodiak Oil and Gas in a deal worth $3.8 billion, along with $2.2 billion in debt, creating the biggest energy producer in the Bakken Shale and Three Forks formations in North Dakota. Both companies strongly higher on the news there.
And another big takeover today. This one involves rival engineering and construction companies. Los Angeles-based AECOM Technology, which did work on the brand new World Trade Center here in New York City, is buying San Francisco-based URS Corp for $4 billion. The deal sent shares of both companies up more than 10%. And still another deal that's almost there, and it's a biggie. Chicago-based drug maker Obvi is offering nearly $54 billion for Irish pharmaceutical giant Shire. Now, if approved, and Shire did say it's ready to recommend the deal to shareholders, the company will do what Mylan plans on doing, a corporate inversion, moving its headquarters to the United Kingdom in order to save on American corporate taxes. Shire rose 2% on the news, but AbbVie was off a fraction.
Well, stocks are higher, and so are expectations for salaries. A new survey from the Federal Reserve expects median earnings growth in June to be 2.5%, up from just 2% in May. And perhaps surprisingly, the increase is being driven mostly by workers who don't have a college education.
With all those corporate deals sending stocks near all-time highs again and the nation's jobless rate down to 6.1%, there's growing concern about when the Federal Reserve might begin raising short-term interest rates. Now, we got some more clues today about the timetable. San Francisco Fed President John Williams told the Wall Street Journal that after making more progress toward unemployment goals, the central bank could begin raising its benchmark rates earlier than previously expected.
Rates may not be the only things rising soon. The biggest names in aviation were in England today for the annual Farnborough International Air Show, where strong demand for jets is very evident. Executives from Boeing were on hand in the UK, and on Wall Street, investors sent shares of Boeing 1% higher. Phil LeBeau has our report.
For those who think demand for new airplanes can't go much higher, the Farnborough International Air Show flies in the face of conventional wisdom. Airbus is launching a new twin-aisle plane. The A330neo starts flying in late 2017 and is already requested by airlines seeking greater fuel efficiency.
We sold more than 1,000 aircraft so far on the 330, and we have studied how to reduce the fuel burn, so it will be more efficient regarding fuel burn than the 787 with a lower capital cost, higher maturity, higher reliability, so we have a market of more 1,000 aircraft to sell.
Boeing's Dreamliner, with a backlog stretching beyond 2020, shows airlines remain hungry for new planes with lower costs.
We track deferrals and cancellations below historical averages right now. There have been some other deferrals and cancellations in the industry. I think others would have to answer to those trends, but we see ongoing, strong demand, and we're gonna produce to it.
With several military jets soaring over the air show, many here in Farnborough were hoping to see the Lockheed Martin F-35. But the new fighter jet is still grounded while the Pentagon tries to figure out why an F-35 engine caught on fire in late June.
I'm certainly confident they're going to go through a disciplined process. They always do. This is normal for any aircraft development program. They'll go through a disciplined process. They'll get to root cause. And we're very hopeful that it'll be in time for the aircraft to be here.
If the F-35 is cleared to fly here at this air show before the end of this week, it will be welcome news for Lockheed Martin and for a program that's been criticized for lengthy delays and costly overruns. I'm Phil LeBeau for Nightly Business Report at the Farnborough International Air Show in Hampshire, England.
Coming up next, the surprising long-term trend in your 401k, and for a change, it's good news. We'll tell you what just ahead. Traveling for business can be hard and may have just gotten a little bit harder. Business travelers are being warned about a new threat: cyber attacks on their personal information through hotel business center computers. Eamon Javers has our story.
It's a familiar ritual for every business traveler on the road. Stop in at the hotel business center and print boarding passes for the next day's flight. But now the U.S. government is warning that those hotel business centers could be a dangerous place to do business because cyber hackers are trying to get into the computers there and steal personal information about corporate executives on the road. The U.S. Secret Service and Department of Homeland Security told hotel operators in a warning last week that they do this by infecting the computers with so-called key logging malware. That's harmful software that allows attackers to copy every keystroke made by a computer's user and capture sensitive information like passwords and account data. The new government warning was first reported by the cyber blog Krebs on Security.
We need to realize that, we don't live in a world where our information is kept private just because we happen to be at our favorite hotel or we happen to be at a coffee shop that's got an open network.
For corporate road warriors, there really are only two ways to keep safe.
Anytime a road warrior encounters a situation like that, use your own laptop, or communicate in a way that doesn't share any confidential information. Otherwise, there's really no telling what could happen.
The hotels say they know they're under attack. A spokesperson for the American Hotel and Lodging Association says many hotels are already adding new layers of protection, including installing antivirus software, using tamper-proof devices, restricting access to business centers, and providing individual unique logon credentials to access business center computers.
This is the kind of attack that can be very difficult to stop. The hackers can insert the malware over the internet, or they can get physical access to the computers in person using the disk drives of the machines themselves. And with the business centers busy 24/7, it can be very difficult for the hotel staff to see who's there to do business and who's there to commit a crime. For Nightly Business Report, I'm Eamon Javers in Washington.
Well, if you're in the market to buy some fine art, placing a bid will soon be a click away, and that is where we begin tonight's market focus. eBay and Sotheby's are teaming up to build an online platform to make it easier to buy collectibles online. The auction house and the online marketplace plan to broadcast live auctions from Sotheby's New York headquarters. That way, you can bid live in real time from anywhere in the world. Terms of the deal not disclosed. Despite the news, shares of eBay were down slightly today to $51.16. Sotheby's was up 1% to $40.09. Shares of Riverbed Technology tumbled after the network equipment maker cut its second quarter revenue forecast, blamed lower sales in North America because of a delay in closing some of its larger deals. Following the announcement, the hedge fund Elliott Management reaffirmed its bid to buy that company. The stock nevertheless down 8.5% to $18.60. Home Depot will start selling Status's 3D, say that 5 times fast, 3D printers at stores beginning today. The home improvement retailer will have the product in 12 of its locations in California, Illinois, and New York. Customers can use the printers to create parts like cup holders, making 3D printing a little bit more mainstream. Shares of Stratasys edged up slightly to $104.62.
Domestic steel producers like U.S. Steel could face renewed price competition from China. The World Trade Organization ruled that U.S. tariffs violated global trade rules and improperly imposed duties on Chinese steel products. It also said the U.S. must change its taxes on certain Indian steel products. That sent shares of U.S. Steel down more than 5% to $26.16. Manchester United and Adidas have agreed to a record-breaking $1.3 billion uniform deal. The 10-year contract will begin in 2015 when Nike's deal with the soccer team expires. Now, for that hefty fee, Adidas will get free advertising on one of the world's most popular soccer uniforms, and it'll also be the exclusive distributor of the team's merchandise. Shares of Manchester United popped nearly 5% to $18.64. And shares of Exelixis soared on word that its experimental skin cancer treatment that it's developing with Roche is showing positive trial results. The company says the drug helped people with an advanced form of skin cancer to live longer without the disease worsening when combined with another treatment. The stock surged nearly 23% to $4 and change.
Well, according to the investment company Institute, that's the mutual funds big trade group, by the end of last year, nearly 38% of 401k plan assets were invested in equity mutual funds. And guess what? The fees on those funds continue to drop, meaning more of your money went to work for you. Joining us to talk more about this trend and others is Brian Reed, chief economist at ICI. Brian, welcome back. 3 quick questions. How much did the fees on average fall? Why? And how does this translate into more money into my pocket as a fund holder?
Well, fees have dropped 30% in the last decade. And just between 2012 and 2013, they dropped 5 cents. What do I mean by 5 cents? Well, stock investors in a 401k now are paying 58 cents for every $100 invested, compared to 63 cents in 2012. And a decade ago, 83 cents. What this means for you is that, as you said, more money of your money is being put to work into the market. And why this is happening is that employers are helping to drive greater competition, and the fund industry is responding. They're coming out with new share classes, new types of funds that have lower fees. And also investors and their employers are going towards more index products or passive products, which tend to be lower cost as well. All this is contributing to this decline.
And Brian, are you finding that investors are putting more of their money to work, possibly because of these fees? We always hear that the individual investor has so much cash on the sidelines. Is that cash now going into these 401ks and being invested?
There's a lot of money going into 401ks. There's no doubt about that. I think the improving employment situation with unemployment coming down and employment going up is helping investors have more cash flow in their overall balance sheets and their income, and some of that is being put in the 401k market. To your point about the sort of overall cash positions, we're finding that if you look at households overall, the amount of cash that they're holding, while the total dollar amount is at a record high, the percentage of the overall financial assets of investors is at a near record low at below 15%. And this has been hovering in this area for a long time. So investors look pretty fully invested right now, not only in their 401ks, but outside.
So far this year, Brian, where is the fund money, and not just in 401ks, where is the money going? In some of your research, it indicated to me that relatively less of it is going into actively managed domestic stock mutual funds, which speaks to the popularity, I suppose, of ETFs and index funds. But overall, where's the money going?
Well, we're seeing several trends. First of all, as you indicated, we're seeing strong inflows into passive, particularly in domestic equity, where the passive has, I think, the strongest presence. We're also seeing very strong investor demand for mutual funds that are investing outside the United States. You know, this has been part of a trend that's really been in place for close to a decade now, as U.S. investors have tried to diversify their portfolios within their 401ks and outside to include more foreign investing. This would even include some emerging market bonds and bond funds. In addition, we are seeing renewed investor interest into taxable bond funds, as well as new flows coming into tax-exempt bond funds. Even though last year we saw some outflows following the rise in interest rates, money is coming back in now.
All right, Brian Reed, thank you very much. Brian is chief economist at the Investment Company Institute.
And coming up on Nightly Business Report, putting the fun in family road trips. How DreamWorks and Microsoft are hoping to put an end to the infamous question, are we there yet? Just as the nation hits the peak of the summer driving season, we've got some good news about the cost of gasoline. Prices at the pump are down an average of 4 cents a gallon over the past 2 weeks. That works out to $3.67 on average nationwide. And they're now 8 cents lower than this time last year.
Volkswagen is making a big investment in Tennessee, $600 million to upgrade a current Chattanooga factory and build a brand new research center there. The German automaker will build a new 7-passenger SUV there, hoping for big sales here in the U.S., and will add another 2,000 jobs to ramp up production.
Well, while one business opens, another looks to be closing down. Employees of the Trump Plaza in Atlantic City were notified today that the hotel casino expects to shut its doors in September. More than 1,100 people will lose their jobs. Trump Plaza, though, isn't alone. It could become the 4th casino in the struggling New Jersey gambling mecca to close this year due to declining revenue from newer gambling sites in nearby Maryland and Pennsylvania.
A different kind of gaming. Video games may never be the same again, especially for families on the road, after Microsoft and DreamWorks Animation decided to combine forces on a new venture. Julia Borston has the story.
DreamWorks Animation and Microsoft are teaming up to bring dragons into the world around you. Yes! DreamWorks Animation Dragon Adventure World Explorer targets kids playing games in the car. It layers in precise location-based technology, Foursquare maps and the Weather Channel, so when kids fly on the back of the Dragon Toothless through the Isle of Burke, the game reflects the time of day, weather, and the roads and landmarks around them.
When you get in the car and you start moving down the street, your car is represented by a cart. The actual streets and buildings around you are all transformed. So if you drive by a restaurant, it'll turn into a Viking eatery. And if it's a popular place, you'll see lots of Vikings milling about, and we're getting that data from Foursquare.
And if parents plug in where they're headed, the game automatically winds down when arriving at a destination to prevent battles getting out of the car. Starting today, the game is available for free for Microsoft devices. The tech giant's looking to showcase its entertainment tools, while DreamWorks Animation invests in promoting its characters. No word on if or when it'll be available on Apple and Android devices. When you're at home or want to turn off location tracking, the game allows kids to explore 16 cities from San Francisco to Washington, D.C. to Beijing.
And I think it's a really new kind of fertile area that people are starting to experiment with. We're certainly going to be looking at introducing other experiences, not necessarily just games, and taking them to consumers, whether it be maybe built directly into a car or something that you could do at home and explore the world virtually.
As for concerns about location tracking kids, Microsoft assures parents that it doesn't retain location data. But down the line, all that location information could be valuable for targeting ads, which could translate to big revenue and annoyed parents. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Looks kind of cool. Would you use it for your son?
Well, my son uses the iPad all the time on car trips. There's one word of caution, though. On a windy road, use it at your own peril. You can get a little queasy with them.
Does look like fun, though. That's Nightly Business Report for tonight. Thanks for watching. I'm Susie Garrow.
And I'm Tyler Matheson. Thanks for me as well. Have a great evening, everybody, and we'll hope to see you back here tomorrow night.
I'm Susie Garrett with the Nightly Business Report News Brief. Stocks rallied after a flurry of corporate mergers and strong earnings from Citigroup, which raised hopes for more strong bank earnings this week. Citi also finalized a $7 billion settlement with regulators over risky securities it sold ahead of the financial crisis. Investors cheered the news. The Dow rose 111 points, closing back above the key 17,000 mark. The Nasdaq up 26. The S&P added 9 points. Drug maker Mylan is buying the generic drug unit from Abbott Labs for $5 billion. Whiting Petroleum is paying $4 billion for Kodiak Oil and Gas. Swiss chocolate giant Lindt is buying Russell Stover for $1 billion. And Volkswagen is putting out the Help Wanted sign, adding 2,000 jobs at its Tennessee plant. Be sure to tune into Nightly Business Report right here on your public television station.